Now, there are three main rules for claiming work-related tax deductions. You must have spent the money yourself and not be reimbursed by your employer. The expense must relate directly to you earning income, and you must have records, normally receipts, to prove the expenditure. Now, I'll talk through some of the most common tax deductions that are missed in a moment, but first, let's talk through some of the most wild tax deductions that have been denied. Now, keep in mind, the tax deduction must relate directly to you earning income, so anything that's a little bit more private in nature generally can't be claimed as a tax deduction. So the tax office have denied a truck driver from claiming his swimwear because it was hot where they stopped in transit and they wanted to go for a swim.
Nice.
Come on, that's a bit rough. It's hot. Let him claim his budgie smugglers. So swimmers are private in nature. A truck driver does not need those to earn income, so that's why this was denied. Or the manager in a fashion industry tried to claim well over $10,000 in luxury branded clothing and accessories to be well presented at work. Oh yeah. Need a Louis Vuitton suit to look good at work. I'm claiming a tax deduction for that. Denied. So generally with clothing, only protective style clothing. So high vis clothing, perhaps chef's clothing, anything that's really specific to an industry or it's protective, you can generally claim a tax deduction for those items. But for other types of personal clothing, if you're just an office worker or if you're in retail, you generally can't claim a tax deduction for those items. So the big important question, if you're a personal trainer, can you claim a tax deduction for your activewear? Can you claim a tax deduction for your Lorna Janes? The answer is unfortunately not. The only tax deduction you can claim for personalized clothing in the fitness industry is if that clothing has the embroidered logo stitched on to the clothing that you work for. So if you're working for a gym and you're wearing Lorna Jane tights, you can't claim a tax deduction for those tights, unfortunately. So the most common tax deductions that are missed, things like motor vehicle expenses, work from home expenses, last year's tax agent fees, any costs for you in getting financial advice, any professional subscriptions or union fees, any income protection insurance that's outside of your superannuation fund, any donations made to deductible gift recipients, rental property expenses. If you're required to work outside for long periods of time, things like sunglasses, sunscreen and other sun protection, protective clothing or industry specific clothing, laundry expenses, but only if your clothing is protective clothing or industry specific clothing, any expenses related to you earning investment income, and this one is a bit late, but personal superannuation contributions, but you had to have notified the superannuation fund you intend to claim a tax deduction when you did it. So it's too late for those ones for the 2025 year. You can think about those for the 2026 year. The ATO has an industry specific guide on their website, which is a really good resource to make sure you're claiming deductions that are specific to your industry. I'll leave a link to that in the description down below. Now, the next video in the series can be found right here. Keep in mind, I'm not a licensed tax advisor. This video is for educational purposes only, based on publicly available information. I've just packaged that information in an easy, digestible way for you. See you in the next video.